We are right in the middle of the most overvalued, most exaggerated stock market in the history of the world. Hundreds of years in different markets from all over the world, and we are repeating the same patterns we have seen over and over again. There are countless excuses for why the market is rising and will rise forever, but only one matters. You came here for the truth, so let me unveil that for you. Today I have a very important video to get into, a lot of information to cover. I'm going to show you why the market is seeing these excesses today. We're going to talk about what Jeffrey Gundlach had to say. We're going to look at these different charts, different indicators, and why right now we are seeing these extremes. I'm going to put it all out there for you. You can do what you want with it. I know that many people have their 401k, their retirement account of some sort, whether that's RRSPs, their supers, depending on where you live. You've got a lot of money riding on this, and I get it. Many people, they take a portion of their paycheck, they put it into these accounts every single paycheck. It's automated. They love it because their employer will match it. It's fantastic. If only the stock market would go up forever. You see, they don't know what they're putting their money into. They don't know where their money is going, but all they know is that if the market continues to do well forever, they're going to be okay. And not only that, they will outpace inflation. There's just one problem. It's that we are relying on a group of criminals to keep it all intact. Back in 2008, we exposed so much of their wrongdoings. We knew that they were doing this all intentionally, watching it all crumble down. They didn't help anybody out. They didn't try to soften the blow. They actually made the situation worse because as we came out of it, they created legislation that actually protected them. The government went to the biggest banks who were the reason why all of these things happened. And they said, help us create new laws, new procedures, new regulations. Do you think for a second that anything changed? Absolutely not. They put them all in front of Congress, and instead of yelling and screaming at them, they gave him a little slap on the wrist, a wink of the eye, and said, please help us. That's the way this system is set up, but people do not have the ability to look into the information because they're too busy with their daily lives. And I understand, I get that. It is unfortunate, and I know that when you go to your family, your friends, your co-workers, and you're trying to explain the simplest of things, where money comes from, who the Federal Reserve is, what the central banks are doing, they look at you like a deer in headlights. This is the most basic of information that we should all be taught, that everybody should be sharing with one another, but unfortunately, it's not cool. Well, not everybody keeps up with the Kardashians, I guess. That happens to be more informative or whatever. But anyway, let me get into the information here today. A lot to cover. Let's begin. Jeffrey Gundlach from Double Line does these webcasts every so often. I happened to catch the end of the one that he did today as I record this video. He was answering people's questions, and I took some notes. I noticed in this Bloomberg article that they touched on one that I want to mention. Essentially, he said this: he expects gold will keep trading higher despite today's setback in prices, and that he wouldn't be surprised to see the market return to its March lows. He did not go into detail on either of these. He was just firing off the answers as he was reading the questions. It would be nice to get a much more detailed response. If he does bring out any more information related to this, of course, I will share that with you. I found it funny that they didn't mention some very important stuff that he talked about. He said the US dollar will not be the reserve currency forever. He also mentioned that it is not possible, these are his words, it's not possible to unwind the stimulus. And then he followed that up by saying it's not possible to pay back the unfunded liabilities. So what happens in these cases here? Do you have inflation? Do you have maximum austerity, high taxation, or do you default? I'm not sure where they're going. Maybe it'll be a combination of all of them. But I know what has happened in history, and it's not good. But I guess this time is different, right? This was from about a month ago or so, but it's going to lead me into what I want to talk about here in the second half of this video. The world's largest wealth manager has a message for any clients tempted to follow day traders into some of the equity market's more exotic stocks in search of a fast buck. Don't even go there. This is Charles Day from UBS talking specifically to his rich clients, saying this: the stocks that I hadn't heard of 3 months ago are all of a sudden the most active. That's not where investors go. That's where traders might go or hobbyists might go. If you're a wealthy investor, you have to avoid thinking that you're missing out on huge returns in these stocks. Everybody is a pro today. Everybody's a guru today. But of course, these people who have seen decade after decade after decade of swings, they're certainly not unwise. Now, does that mean that they would sell everything right now, go hide in their bunker or something like this? No, that's not the case. That's not what they're doing. It's just saying you have to be smart with where you put your money. That's it. This just shows you how crazy things are today. Evaporation of diversification. You know, the S&P 500, that's right, a big group of stocks. Well, actually, not much of a big grouping anymore, because look at what has happened. The S&P 500 has become 5, not 500. Amazon, Apple, Google, Microsoft, Facebook. Look at what has happened throughout this supposed bull market. It is huge right here. But you take the other 495 and the growth looks dismal in comparison. Yes, it has grown, but without those top 5 stocks, things look really, really different. To me, this is unbelievable, but that's the way it goes. When you look at the PE ratios of some of these stocks in here, they're giving us Facebook, Apple, Amazon, Microsoft, and Google 33. It's over 33 today, and that is so extreme historically, it's unbelievable. You could say things are different now. You could say that certain stocks would always be higher, but come on, let's be realistic. It has gone way, way above history. We've gone into the levels of the tech boom. People made this excuse, let's say from 2014 into 2016, where it was hovering below that 20 mark. Well, you know what? These particular stocks are higher for this reason or that reason. Things have changed over the years, but now we're at 33 and they're still making the same excuses. I don't believe this is the be all end all. I don't think that this indicator is the holy grail, but come on, things are out of whack. Silver got beaten down. In fact, it was the biggest one-day percentage change since Lehman Brothers. It had risen up considerably. I've been showing you a few times here on the channel, so there definitely is some profit taking. But I just thought that it was interesting to see how fast it dropped in a single day. And seeing the difference right now between commodities and stocks is something to note. And when you look at the comparison between precious metals and commodities, you see that there is a great disparity. That blue line there, that's gold. That reddish line, that's CRB. Comparing the two of these, you could see that basically since the financial crisis, commodities have been falling considerably, whereas gold has had its share of ups and downs. Now we can compare the commodity stock index, which as I just showed you, didn't look very good. But taking a look at it, when you compare it to the Dow Jones, it is extremely undervalued today, more so than we've ever seen. This chart goes back to 1937. There were periods where it became overvalued, like during the financial crisis, right around that point, 2008. But ever since then, it's been falling, and you can see that today. Today, there is so much euphoria and optimism, but I would say it's misguided optimism. Look at the dumb money confidence. You can see more of a breakdown at the top, but I just wanted to show you this. Look at all of the red dots that you're seeing on this chart. They happen at these certain moments in time, and they are always followed by a correction or a crash. And that's not a good thing. It's always when people are so optimistic that things turn around. And today, right now, we are looking at the same situation. Now, that doesn't mean it can't go on. Look at this instance right here. Leading up into 2020, it was going and going and going and going. But then what happened? There was a falling out, let's say. But regardless, when you look at the data as it is presented to you, it's pretty clear. I always love to show this whenever I can because it is so telling, and that's the Fed balance sheet versus the S&P 500. As they expand the balance sheet, you can see that it corresponds directly with the S&P 500. It's very clear, but without the intervention from the Federal Reserve, from the other central banks, the money printing being flushed into the system, the stock market would be declining just as we saw in 2018. The extreme risk taking as a result of that money printing is very clear. I showed you that a moment ago, and you can also see with the put call ratio. There have been 3 times in history this year where these out of whack ratios have resulted because of all the money printing that's been taking place. You can see that investors, high frequency traders, and just about everybody has been taking more risk. They know that this is a risk on mentality, follow the herd, and so on. But you can see that not only in what I showed you just a couple minutes ago, but also in the put call ratio. And we see this right here. The past couple times that this has occurred at these levels, we have seen corrections, we have seen crashes. That is happening right now again today at these beyond euphoric levels. It has gone into Looney Tunes land. I don't know the proper word for it. I want to call it fiction, but we're looking at this right here. And to finish the video off, just take a look at what's happening with the negative yielding debt. I like to give you an update on this as often as possible. The red line, $16.2 trillion. Globally today, there are $16.2 trillion of negative yielding debt being traded. That means you're guaranteed to make a loss on it, and investors are buying it up. This chart goes back from March, and you could see basically month after month after month, there is more demand for this junk. What does that say about the value of money? That's all for this video. If you found it informative, hit that thumbs up button. By clicking one button, you are supporting the creator of this video. Thank you. If you want to learn how to make money online, you want to understand e-commerce, there are many good courses out there for $1,000, $2,000 plus. If you would rather get one for free, I have one, the AmazonGPS.com. If you want to understand the financial system from top to bottom, A to Z, the foundation, the history, the asset classes, making money, everything in between, definitely check out my 2 books. They're in the link in the description if you want the audiobook instead, themoneygps.com. Do you want solutions? Do you want to understand how to do things right here at this time for 2020? I've got a playlist called How To and Solutions. Check it out. I'll see you there.